got to make sure that those numbers are completely accurate. I'm making a point that for 10 years it's gone nowhere. If you're sick, you go to the doctor. If you've got a toothache, you go to the dentist. Well, in a perfect world, you should go to a financial advisor to help you with this money you've got. My name is Dave Young, and I'm the owner of Paragon. After I graduated from college, I actually skipped my graduation, which my mom wasn't real happy about. But I really just wanted to get on with my life and be done with school and get some companies going. I opened up several businesses. And then in '86, I decided my life had gotten way too hectic. I believe at that time I had around 70 employees and I was constantly on the go. And so I decided I wanted to simplify my life. And so in '86, I decided to sell all those businesses. And once I sold those businesses, I needed to do something with that money. And I wanted to invest it, but I wasn't sure how to invest it. I started searching for a financial advisor to help me. And in the process, I found out there were all types of advisors. There was no regulation. You didn't have to do anything special to call yourself a financial advisor.
He basically found out that, I could probably do this better on my own, because he didn't feel comfortable with the different styles and approaches. It just didn't feel right.
Essentially, the pitch was from these different advisors was, give us your money, we'll diversify it out for you, or we'll sell you some products. If the markets go up, your account's going to go up. If the markets go down, your account's going to go down. But over time, hopefully it'll all work out. I just wasn't confident with hopefully it will all work out as a place to put my life savings. It was really in self-defense that I decided to start managing my own money.
Once he started doing it on his own, he was successful at it. It just blossomed from there. Other people saw that, and then they wanted to have him manage the money, and then Paragon was basically born out of that.
The '87 crash came, and Dave missed it completely.
One thing that I learned was that if you're making decisions based on emotion, odds are your decisions weren't going to work out. Everything that I was doing was based on building models. We would just gather as much data as we could on all the different sectors and all the different areas of the market. And then we would push that data through our models, and from there, that would drive our investment decisions. In the realm of financial advisors, when you start comparing track records, in general, their performance almost mirrors the S&P 500. I've always felt like if that's all that you were offering, it's a little bit pointless, because rather than pay those fees and pay those costs, why not just buy an S&P 500 index fund?
We actually manage the money. Most people think that's what their advisors or their broker or something like that's doing, but usually an investment advisor is just going to hire someone else to manage the money.
Nate and Dave are monitoring those accounts and those investments on a daily basis.
We're not just sitting around and changing their allocation based upon their initial allocation. Our stock and trade is actually managing the money, monitoring the markets, moving with what is going on.
We know and we're aware of what is happening.
It's just a flexible approach that I like. It's very unique.
I've gone to the conferences, I've spoken at the conferences where they're talking about buy and hold. It's always been a debate back and forth as which is better.
With this industry, you've got to be comfortable with change, and you've got to run with it.
The bulk of money that's invested is invested in buy and hold by definition, because most of your larger firms are managing billions of dollars, and you can't really do that effectively in an active way. You're forced into buy and hold. So what do the big firms do since they have to invest with buy and hold? They declare buy and hold as the best way to invest. And it used to be debatable, because the 80s and 90s we had a pretty solid bull market. So there's a constant debate between is buy and hold better or is active management better. But then you get to 2000 and we had the market peak in 2000, and then we had a huge sell-off, and then we had another rally back, and then we had another sell-off. You're not really making any progress. You're going up, and then you're going down, and then you're going up, and then you're going down, and you're just not making any progress. The Dow hit 10,000 back in March of 1999, 10 years ago. The Dow hit 10,000 again in October of 2009. So for 10 years, you basically got no progress. The NASDAQ hit a peak of 5,000 back in 2000, and today it's almost 60% below where it was back in March of 2000. My argument for the buy and holders would be, how long are you supposed to hold this before it comes back? I mean, how long are you expected to follow that advice before you give up? And the sad thing is we're talking about people's retirements. people's goals, people's objectives, people's lives.
This, as I've said before, is the product of their life's effort.
What differentiates Paragon from others?
Well, there's nothing intrinsic about active management that in and of itself, active management is better than passive management. It's only better if you've got disciplined strategies that you follow over time.
When we manage someone's money, we take that so serious. The fiduciary standard that we have in that treating their assets as if it was our own.
And a fiduciary advisor is an advisor who has a legal obligation to act in their best interest.
That's a high level of care that we have to take with their money.
About only 15% of advisors are fiduciaries, which means that 85% are not.
We're also unique in that we don't have any surrender fees. A client can leave at any time if they're not happy with what we offer.
You want to be able to show people that you have the knowledge, ability, and skills and credibility that they deserve.
I mean, Paragon was founded by me to manage my money. So a significant portion of my net worth is invested in the same funds that my clients' funds are invested in, right alongside with them.
They don't have to worry about being sold a product or something that they don't need because our clients do not have to pay our advisors on commissions.
Their argument is that they haven't been able to figure out how to actively manage portfolios, and so apparently no one can. But when you look at our performance, you look at our numbers, to me there's no argument. Our track record has significantly exceeded the S&P 500. Of course, I have to put the disclaimer out there that past performance is no indication or guarantee of future results. But at the same time, we do have 12 years worth of data that you can go and you can look at, and you can come to your own conclusions. As a matter of fact, we provide that information on our website on a monthly basis. We're completely transparent. We're holding our track record out there for anyone to look at. In my opinion, the Paragon experience allows a client to have the ultimate in client service. Their phone calls are returned immediately. Any requests they have are taken care of immediately. When they call, they don't have to worry about talking to someone that's on a beach in India somewhere. They're actually talking to someone who really knows and understands their situation and cares about them as a person.